This is the Daily Market Comment by Harlan Bospiceros. I'm Maria Pachordes. Thanks for joining us at XM.com. The US dollar outperformed most of its major peers on Tuesday and continued to trade higher today. With no clear catalyst to boost the dollar yesterday, this suggests that there was fuel left in its tanks from Monday, when the US ISM Services PMI showed further improvement in November and pointed to stubbornly elevated cost pressures for services firms. Coming on top of an employment report revealing accelerating wages during the month, this may have raised fears over a potential rebound in inflation in the months ahead, which could prompt the Fed to act somewhat more aggressively. Indeed, market participants are now expecting a terminal rate of around 4.96%, while ahead of the release, they were seeing a peak at around 4.92%. Nonetheless, they are still pricing in nearly 2 quarter-point rate cuts by the end of next year. Further data adding to the narrative of higher interest rates in the U.S. could continue to support the U.S. dollar for a while longer. Even in the opposite case, where economic releases point to an economy heading into recession faster than previously estimated, they could prove supportive for the currency through safe haven inflows. The stock market extended its slide yesterday, with the S&P 500 trading in the red for the fourth consecutive session. Once again, market participants decided to sell stocks near the downtrend line drawn from the index's all-time high back in April. The better-than-expected ISM Services Index adds credence to the notion that positive data is bad for stocks and bad data is good, and that's why equities may continue pulling back in case data continues to support the narrative that the Fed may eventually need to raise rates higher. Today, the spotlight is likely to fall on the Bank of Canada decision, with most market participants holding the view that policymakers will deliver a dialed-down 25 basis point hike, despite data suggesting that the domestic economy is doing fine. Perhaps market participants believe that the impact of the already delivered hikes has not been fully felt yet, while remaining concerned about a housing bubble and oil demand by China. Canada is the world's fourth largest oil exporter, and demand complications deriving from the world's second largest economy and top crude importer could well upset growth prospects. What's more, it remains to be seen what kind of impact the price cap on Russia's exports will have on oil prices. Thus, all this uncertainty may indeed prompt Bank of Canada policymakers to hike by only 25 basis points today. This is today's Daily Market Comment. Thanks for joining us at XM.com.